The transfer of wealth is Goldman Sachs or JP Morgan. Okay, prime example. We looked at a JP Morgan collection of assets downtown San Diego. It was three assets, 450 something units all put together. Those assets probably would have never sold had they not needed to exit that property, that collection of assets, which were multifamily assets, and transfer because of the debt. Like, and the thing about that transfer of wealth from the wealthiest organizations on the planet is if you are looking at the right assets based on them needing to sell, not wanting to sell, they could naturally recapitalize, but they're like, dude, we're not doing that right now. A lot of uncertainty in the market. Let's exit these deals, sell them to somebody else, take our assets, take our money off the table, and then sit on that cash, right? And when I'm not talking about your cash, I'm talking about billions and billions of dollars worth of liquidity that they're going to be sitting holding on to, and they're going to put it in a different source of the market. If you know how to take advantage of that, you get to play that game. But if you are not even looking at institutional quality assets owned by institutions who their debt is maturing that has to sell over the next 3 to 5 years, you're never going to play that game ever. It's not even going to be exposed to you. You're still going to be looking at single family houses in your neighborhood where you look, trying to make a couple of bucks, but you'll never really grow up and become a big boy or a big girl because you're looking at the wrong place. The uncertainty is right below your nose and you aren't going after it. So that's crazy. But I share that information with you because, like I said, between the tariffs, uncertainty, the $1 trillion of maturing debt on commercial real estate, which is the most stable asset on the planet, not just in the United States, but globally, that is happening. That has to trade hands. It's either it needs to trade hands to another buyer or it needs to get recapitalized by another refinance. And that's not really the best thing to do right now. Because if the debt's high now and you got to trade out of it, it's going to be high when you trade out of it as well. So the price points of those assets are going to come down. Not dramatically, but enough to make somebody say, you know what, we really don't want to lose those. And here's a secret. Again, I'm going to even get in and tell you this crazy thing. You don't sell your worst assets at the best time. You sell your best assets at the worst time because there's no money in the worst assets. You got to sell something that there's a little bit of equity in there so you can make some money and then you can use that money and you shore up your bad assets. So that's where the opportunity is. Man, I just gave you some gold. I didn't know this. I didn't know this until I started being in the syndication and the private equity fund space where I started looking at, hey, these guys got to sell and they have to pay their investors. And if they're going to take a loss, they can't take a loss on a bad property. They got to sell and take a gain on a good property to cover the loss. They don't want to do that, but they got to. Or they're going to toss the keys back, which they don't want to do either because they lose all of that, their investors' capital. And who are their investors? CalPERS, which is the California the pension fund for California, the pension fund for Florida, the pension fund for Pennsylvania and New Jersey, the pension fund for Texas. Like these are the people who are now focusing on the uncertainty in the market right now. And if you, the little guy, and me, we all put our money together and we go search out deals together and we go, look, let's go play the big game. This is the biggest opportunity in my lifetime to be able to take advantage of deals like this. All right. So that's the other one. So we have the tariffs, and then we also have the $1 trillion worth of debt maturing. 2 trillion, but $500,000 in the $500 billion in the multifamily space, which is getting bigger. Every year that number grows because it's been the interest rates are been sitting where they're at. They're not coming down as fast as people thought. So people, even me, I kept saying this was going to happen last year and it didn't. I thought it was going to happen a year before that and it didn't. But it is happening right now because we have a new administration, which is the Trump administration. So the next thing that is in influx that people are wondering about is their taxes. So the uncertainty in the tax thing is really a good part because people are hoping that Trump 2.0, as it relates to his administration, his economics, Trump 2.0 as an economic plan, is saying, hey, why don't we reintroduce, based in real estate, because he's a real estate guy, reintroduce the opportunity to go ahead and put back in play accelerated depreciation on real estate assets. Meaning, if you bought an asset today, you can do accelerated depreciation and write off 100% of that asset in the year that you bought it. And that started going away. I think right now it's at 40%, right? It's gonna just it went from 100 to 80 to 60, and now it's there. So people are hoping that when the tariff situation clears off, all of a sudden people get this accelerated depreciation come back, or they lower the capital gains tax, right? From where it is now, it's like 20% or 19% down to 15. If they do that, there's going to be an influx of people dumping money back into real estate, which is going to do what? They're not dumping money because the deals are good. They're dumping money because they get the tax benefits of that. And because they got the tax write-offs, it offsets their revenue or their income based on the capital gain side. And then all of a sudden it spills over into their business, it spills over into other things. There's a benefit here. But what that's going to do is it's going to push the values of assets back up. So there's an opportunity for you to see what's happening now before that happens. Who is that? Oh, that's Eric Trump. But I want to hear what he's saying, but I wanted to talk to you guys about this. So what does that even mean? What am I talking about? So the uncertainty in Wall Street. Look, get your cash out of Wall Street. Trade in your stocks, do your other stuff, take your hit, and then roll that into real assets. Real assets that do a couple different things. And when I'm talking about real assets, I'm talking about multifamily real estate, things that you know that you can invest in, that the values are not going to go down. So here's some things that you need to focus on if you're going to use real estate as the vehicle to be able to convert your cash trash, your trash cash, or cash is trash into multifamily real estate or real asset that does a couple different things. Number one thing, it needs to preserve your capital. If you leave your money in the bank, your cash, or even right now in the stock market or Bitcoin, where you bought a bunch of Bitcoin, it's going down, and you're like, yeah, we're going to buy more because it's going down. Look, it's going down. That influx to your cash or your available cash or your liquidity is a problem. The dollar is losing money. The inflated values of cost of goods right now, we talk about it even with tariffs. If it costs you more to buy a loaf of bread, you have $10. Now bread costs you $10. We just saw it with eggs. They had the bird flu. They broke up a bunch of eggs. It was like, don't eat these. And all of a sudden, eggs went from $3 to 12. That's nuts. That means that even though you didn't make any more money, you're $20. If you had to go back and buy eggs now, you ain't buying 3, 4 cartons of eggs. You're getting one. How do you stop that? One, you stop buying eggs, or you go make more money. Period. So while you make more money, you also get taxed more. So even though you are making more, you're stocking away cash. If you're just sitting on a bunch of cash, your cash is not preserved. Inflation is eating away. Inflation of goods, the cost of goods is making the buying power of your cash go down. So how do you fix that? Put your cash into something that's a real asset that inflation brings up that real asset. That's why people are shooting their money over to real estate. They're getting their money out of the banks, out of the stock market, going into real estate. That's number one. Preserve capital. Don't lose cash. When Warren Buffett says don't lose money, that's what he's talking about. Don't lose money, not just losing your money on an investment, but losing the buying power of your dollar based on your losing it to inflation. All right. So that's the first one. The next thing you need to do is you need to make sure that you move your cash not only to a real asset that protects your capital, it also needs to cash flow. Cash flow is the holy grail of all investments. It needs to send out money. Stocks, they don't all send out dividends. Bonds, they do, but you get taxed on that. So it's a little bit different. So if you were to be able to take your cash and put it into something like real estate, multifamily real estate, income producing, big real estate at scale, not a single family houses do not cash flow. Even if you're renting them out to one tenant, that's one tenant. Would you buy a business that has one customer that comes in every month and maybe they want 1 month? Because what happens? You have to pay the lease, you have to pay for the goods, you got to pay storage. It doesn't make sense. And it's the same thing with one single family house. You need to buy something that has scale, that does cash flow, that pays you every month. Every month. Big thing. Covers your debt, covers your expenses, and there's money left over every month that pays you based on the money you put into it. You get a return on that money. That's huge. So it has to cash flow. Next thing it has to do, you need to get the tax advantages of that. So you keep more of what you make from your investment. So real estate does that. Stocks don't do it. The other stuff, bonds don't do it. Your Bitcoin don't do it. If you had your business doesn't even do it the way that it's supposed to be done. It just doesn't. It doesn't operate that way. So if you think about real estate from that perspective, and we just talked about the tax advantages that are coming back to real estate, let's say they don't. You still get the tax benefits of real estate. You get the mortgage interest rates write-offs. You still get depreciation. It's just not accelerated. It's just spread out over 27 years or 35 years, whatever it is, rather than be able to yank it all right now and kick the can down the road. If you sell the asset, you get to do a 1031 exchange on that asset, and then you get to also take your gain and roll it into another asset. You get all of the benefits. The tax code is written primarily for real estate owners. Real estate owners as an investment, not real estate owners all the time as a homeowner. Yes, you get some benefits as a homeowner, but never the same amount as if you were an investor, a capital partner inside of an asset. I was listening to Don Peebles in an interview when he was at the 10X Growth Conference, and he said something interesting. He was like, if we bought a $100 million deal and we sold that and we made $100 million, we would pay less taxes on the $100 million gain because the tax code is written for capital gains, right? The benefits of that. Then the attorneys who work there, then the maintenance people who work there, then all the people who worked on that job, they will pay more money on the taxes that the money that they more taxes on their money than we would pay, even though we actually made the lion's share because it was a tax benefit, because it was an investment. Very different. The tax code is written for the investor. It's not written for the worker. Period. So if you're going to take your money out of fiat, dead cash, and you're going to convert it into something, one, it needs to protect your capital. It needs to keep going up in value. You don't want to lose it to inflation. Two, it needs to cash flow. You need to make money on that money. Number three, you need to have the tax benefits. So the money that you made from the cash flow, you get to write that off based on the tax benefits of owning or being an investor in that asset. And then last but not least, it needs to have scale. Everything that I talk about is always going to be about like, hey man, one door or 100 doors on one address. You want one door or 10 doors, or would you rather have 10,000 units and be an investor in all 10,000? You can be a limited partner. You can say, hey, look, I got 200,000 or 300,000. I'm going to invest with Victor in a 400 unit apartment building. You are still an owner. You are still a limited partner in the entity that owns that asset. You can still say, look, I'm an investor in 400 units. I'm a partner in 400 units. I get cash flow. I get tax benefits. I get the K1 every month. Every year. That is the benefit of being an investor when you invest at scale. You don't always have to run and buy deals yourself. That is the biggest problem with most people. I got to do it myself because my mom told me I don't need partners. My dad told me partners are bad. That is not true. If you look at Eric Trump, Donald Trump had partners. Right now, the Trump 2.0 economic administrative plan, it's all a giant partnership. All the wealthiest people who own private equity companies, financial advising companies, hedge fund managers, all these people, they are all part of his team. They're his partners. If the president has partners, if most wealth, JP Morgan, it's a giant bank, but they're partners. Goldman Sachs, they're partners. Blackstone, they have multiple partners. BlackRock, multiple partners. Steve Schwarzman, naturally at Blackstone, he had a partner. Everyone has partners, but you're running around. No, man, I'm gonna do it all myself, man, because I want to make all the money. Look, you are losing. You will never create real wealth by yourself. Even Jesus had partners. He had the 12 disciples. He didn't do it all by himself. You have to know when it's time for you. Like I want partners. Bell Capital is a giant partnership. It's not something that I'm trying to do by myself. So when you guys are thinking about investing and you want to invest with somebody like me, I'm a great partner, right? That's why I make these videos. I don't make videos because I want to make videos all the time. I make videos because I want you to get to know who I am. So if you do stuff with me, like some of you guys do reach out to me from here and we talk, it feels like I know you and it feels like you know me because you already know where I stand. So when you take a look at your investments and you're investing through, like I said, those things, preserve your capital, cash flow, appreciation, and the tax advantages. And oh, by the way, you got the scale. The scale comes from you investing in bigger properties as a partner, right? That's how that works. But I wanted to share this with you because really the topic of today's video was about the uncertainty that's going on in Wall Street investments. Wall Street investments right now has massive amounts of uncertainty, but inside of uncertainty, there's always opportunity, and you got to know what you're looking at. So what's the uncertainty? Tariffs, taxes. Is that coming back the way that people are? It's going to come back. It's going to come back, period. Or it's going to come back and somebody's going to take it away over the next 4 years. So you also want to be in a position to capitalize on it. And then next, the trillions of dollars worth of debt that is maturing currently right now. You want to be able to take a look and say, dude, there's massive disruptions going on in Wall Street right now. There's massive disruptions going on in the housing market, the economy, around the world, the tariff wars that's going on, the current wars that's happening, the actual wars that's happening between Ukraine, Russia. They did this recent conversation that they were like, hey, we need to do like a ceasefire. And then Russia's like, yeah, we'll do it, but we have all these stipulations. There's things that are going on right now with NATO. They have this giant disruption. Everybody's going to war because they don't want China to become what China's already on the path to continue to do, which is to continue to progress. Between all these things happening, AI, technology, this battle for all of these things, where do you fit in there? And I can tell you the number one thing that I believe that they continue to talk about it, but I think people miss it. Real estate is the only stable, sophisticated, yet unsophisticated thing that the average everyday person can invest in that gives some stability that nobody's going to disrupt and or touch. It can be cheaper. It can be more expensive. It can be cheaper. But if you have your money parked there long term, you will not lose it because the fact remains no matter what's happening, people will always need a place to live. And if you own a piece of the housing, I'm not talking about a house, I'm talking about housing. If you own a piece of housing where people have to move into at scale and it's existing and it has some long term gain to it, meaning like it's going to go up in value based on inflation, not you pushing on it every day. We're not talking about flipping burgers and selling shirts. We're talking about over time, the cost of where people live is going to continue to go up, period, because things cost more. So that is an inflationary thing too, as an investment. That's where you want to be at, period. Not in the bank, not in a retirement account, not in a 401k, but an investment that continues to pay you so you get to write off more stuff and you can die and leave it to somebody else. All right. So track this. You guys can see this right now. Eric Trump's probably talking about something important and I'm missing it. You're missing it. But I wanted to share that with you because the fact remains that, and he said it the other day too, let's get out of politics and I want to get back to capitalism. What does that mean? Go back to making money. Start focusing on real estate again. Start putting your money back where it is because it's slowed down, but now it's going to pick up. And the only people who are going to win are the people who are going after these type of deals over the next 2 years. You got a 2-year window before it stops. And then people are going to start transitioning out of the Trump era. All right. So take advantage of it. That's where the win is going to be. AI, real estate, and Bitcoin. You are not a Bitcoin miner. You are not a tech guy where you can go out there or a tech gal where you can go out there and capitalize on AI. You're not going to write code. You're not going to do all that stuff. The one thing that everybody can take advantage of is always going to be real estate. It's going to be housing. It's going to be at scale. All right. So let me know if you guys need anything. If you're interested in investing with us at Bell Capital, go to bell-capital.com. There's 2 things you can do. Only 2. Schedule a call, or you can register there, hit the get started, and you can go on there and you can take a look at what we have available. And it's only for accredited. You got to have a good attitude. You got to be a good person, and you already got to love real estate. And if you want to talk to somebody on my team, myself, or anybody else, hit schedule a call, and it'll probably be me. Somebody's going to reach out to you and find out how we can help answer any questions you have and get you started with your investment. All right. So let me know if you need anything. Give it a like, give it a subscribe, give it a thumbs up, or give it a thumbs down. Don't be a hater and a hider at the same time. But I'm here for you. I want it all. Let's go. Boom. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.